Uh, Good morning, good afternoon, good evening, wherever you are. So, this is question two, uh, past paper, public sector accounting and reporting. One, April sitting. So, it's question two, April sitting, question 2A. So, the question asks this with reference to IPSAS 11, construction construct, summarize four disclosure requirements for public sector entities with regard to construction contracts. So what are these four disclosure requirements? So disclosure one says contract revenue. Contract revenue. What's contract revenue? Like it says IPSAS 11, currently replaced by IPSAS 47, says disclose the amount of contract revenue recognized as revenue during the period. So disclose the amount recognized as revenue during the period. For example, you say in your financial statement disclosures under the notes, shilling, for example, 450 were recognized as contract revenue on a national highway project this year. So that is what you say. Stage of completion. That is the second disclosure. Stage of stage of completion. So method used for contract in progress. So what cost method were used? Like you can say cost to cost method were used. And then you go ahead and say cost to debt, where 300 million divided by total estimated, which is say 60% complete. Like you can also alternatively use survey of work performed or physical proportion completed. So you talk about stage of completion using the method for contracts in progress. And third, you talk about contract in progress. When you talk about contract in progress, cost plus recognized surplus less recognized deficit or any advance received. So you disclose the aggregate cost incurred plus you also recognize surplus less recognized deficit together with any advances received. Okay, so cost plus recognized surplus to debt. For example, 350 million. Again, you also say the advances received were 90 million. Retentions held are 25 million. You can say certain examples like that. Gross amounts. Gross amounts due from customers. For example, 40 million shown as an asset, which is receivable due to customers shown as liability. For example, 15 million due to customers. So you disclose gross amounts due from customers as an asset and gross amounts due to customers as a liability. So let us go to question 2B. Let us go to question 2B. With regard to IPSAS 22, disclosure of financial information about the general public sector. Explain. Explain four characteristics of a government business enterprise. So what is a GBE, a government business enterprise? What we look at is the legal capacity, power to contract in its own name, power to contract. The entity can enter into contracts using its name. Yes, they can sue and be sued. So they have legal capacity as a person, as a company. So a state power utility signs supply contract and sues or sue in its own name, not through the treasury. Okay. Commercial mandate. When we say commercial mandate, what do we mean? Commercial mandate. It has the financial and operational. It has financial and operational authority to carry on business. Like, like we can say, uh, a national generation company runs its own operation and makes its own investment decisions. Okay, commercial return, commercial return. While other government entities, this is business enterprise. While other normal government entities, theirs is not to get profit. This one's, it sells goods and services at a profit or on a full cost recovery basis. For example, a national ports authority charges commercial tariffs set to cover cost and return a surplus. And then finally, we have financial independence. It is not dependent on continuing government funding to remain a going concern. So they can fund on their own, they can fund themselves. So a profitable boat or utility fund itself from its own revenue and borrowings, not annual exchequer grants. So now we can move to question 2C. Question 2C, which talks about the budget. So we have receipts and payments. We have receipts and payment. So we have receipts and payments. If you have this past paper, you can open past paper, April 2025 CPFM. Open the past paper and also you can download in my YouTube channel. I have put the link in my channel where below you can download. So once you download, you see the following summary of receipts and payment was extracted from the Ministry of Finance for the fiscal year ended 30th June 2024. This is the revenue. This is the revenue. We will walk through together. This is the revenue. So the revenue here, borrowings, foreign, disposal, trade, other receipts. And then these are the payments. These are the payments, health, education, housing, defense, fisheries, other payments. Then this is the additional information, disposal of assets. So you go through one line by line, disposal of asset, domestic borrowing, defense expenditure, health. So these additions and subtractions or decreases, we will adjust on our budget. And this budget statements is very simple under IPSAS 24. So what you are required is, these are free 12 marks. Statement of comparison of budget and actual amounts for the fiscal year ended 30th June 2024 in accordance with IPSAS 24 presentation of budget information in the financial statement. In the financial statements. So here we will build the budget. We will record the actual, then measure the variance. So there is the original budget. The original budget. What do we call the original budget? What's this original budget? When you talk about the original budget, what is it? The original budget. So we start with the original budget. But what is the original budget? Original budget is the initially approved budget. Like, for example, the first time you take an appropriation bill to Parliament and it's approved, it is the original budget. Thereafter, due to circumstances which are not within our control, which may happen from time to time because of lack of proper revenue collection, we have under collected, or we have floods or other problems which we are facing, then we come up with supplementary. Supplementary are just adjustments. They are new or addition or reductions of adjustment. Then after that, the original plus or minus the supplementary changes, we get the final budget. Final budget is the original budget plus any supplementary changes. Any supplementary changes. And thereafter, the actual amounts is mostly the figures we normally pick from the cash flow, and it's what we pay during the year. What we pay during the year. Okay. And then the variance. The variance is you take the final budget and then you less the actual. You take the final budget and you less the actual and you get the variance. So let us prepare statement of comparison of budget and actual amounts. I have the statement with me, so we adjust together. So let us move. These are the titles. The titles, you have the receipts, the original, the change, the final, the actual, and the variance. So revenue. If you look at the revenue, we started with 840. There was no change. Then The final is 840. The actual spent is 800. Therefore, the variance, you take the actual less the final. It is 40. Then, if you look at domestic, we started with a figure, original figure of 560. Then we were told there was an additional adjustment of 60. Now we add 60 plus 560, we get 620. We get 620. Let me draw over it. So we add here this plus this. So 560 plus 60 will give us 620. Will give us 620. So 620 minus 560, the variance is 60. Okay, let us continue. Foreign borrowing. Was there any adjustment? There was none. Foreign borrowing. There was none. So if there was none, then 400 minus 360, that is 40. 40. So let us go to disposal. Let us go to disposal. Disposal of parastatals. We started with 180. We had an additional of 40. We had an additional of 40. So after that, we get 220. So this you add together. This you add together. You just add together. Once you add together, you get. So the change is just an addition. And then you have gotten this to 20. You less 200. You get a variance of 20. Trading activities. Trading activities, there's no changes. Trading activities, there's no changes. We'll just put the headers and put it this way as it is. Other receipts, again, there's no changement. So now we get our total receipts. Our total receipts. Let us move to, let me clear this. Let us move to payments. So for payments, the same applies. Original, change, final, actual, and variance. So we start with health. Health, there was a change of minus 30. Health, there is a change of minus 30. Education, there is no change. Housing, there is no change. Defense, they were given more money. 280 plus 20, that's 300 minus 240, that is a variance of 60. Fisheries, there is no change. Other payment, there's no change. And by the way, there is percentage of variance. Percentage of change, or percentage of budget utilization, where you take the actual and divide by the final. You take the actual and divide by the final. You take the actual and divide by the final. Okay. So now we have the actual payments and the actual receipts, the total for everything. So here, final surplus is 2520. Receipts less 2090 for payments, which will give us 430. So the receipts shortfall. The receipts shortfall is minus 90. What was budgeted to what you actually receive is minus 90. The additional payments, like the actual payments we paid more. Additional payment is minus 30. Actual payments above final budget. Therefore, we have an actual surplus. We have an actual surplus of 210. Actual surplus of 210. Actual surplus of 210. So there is where I will stop. There is where I will stop. This changes is caused by, because most of the time in government, if we were using a balanced budget, then the variance and the surplus could have been the same. But in this budget calculation, both are not the same. And I hope we will do another question, which we have a balanced budget where the revenues and expenses do not have a surplus. Thank you for watching. Please subscribe if you have not subscribed to my channel. Until we meet again, bye bye and enjoy your time. Thank you.